All right. Welcome to Momentum Monday. Today is July 9th, 2023. Howard, you're in, what was it? Muskoka. Muskoka.
Muskoka, which is cottage country in outside Toronto, about 2 hours north of Toronto. It's fantastic.
Did you catch any fish?
I didn't fish, my buddies fish. We fish a lot, but I kind of got out late last night and we did not go today. But smallmouth bass fishing. And it's fantastic. Oh, you're in San Diego, eh, buddy?
Yeah, I'm in San Diego.
All right, take us through it.
All right. I'm still in the bull market, obviously, but bull markets climb a wall of worry. There's always something to worry about, and recently, I think the biggest concern has been the increase in interest rates. The 10-year yield went back above 4%, and it's approaching almost new 52-week high. So this is like a 3-year chart. You can see here it's just approaching new highs. And for the past 3-4 months, it hasn't really mattered as the tech stocks and many other stocks just continue to power higher, regardless of what interest rates are doing, regardless of what the Fed is doing. But in the past week or so, I kind of noticed that breakouts stopped working as well as they did in the previous 2-3 months. We're seeing more fakeouts, a lot of the breakouts are getting faded.
Mm-hmm.
This doesn't mean that breakdowns are really working. For the most part, dips and pullbacks to rising 20, 50-day moving averages are still getting bought, but breakouts are not working as well as they used to. And here I just wanted to show you another chart where we have the QQQ and TOT. TOT, this is the long-term treasuries. They kind of moved together, very high positive correlation for a very long period of time, ever since October last year. And they kind of diverged at the beginning of this year as the rates went kind of sideways, but the QQQ just powered higher as the market expected inflation to come down, and it has been coming down. The question is now, with rates going back above the 10-year yield going back above 4%, will market expectations regarding rates change, and what the impact will be on really the bull market that we've been having.
Mm-hmm.
So this is the biggest concern right now. Other than that, it's just consolidation mode for big tech. And it's still a market of stocks. We have areas of notable strength. Areas like anything related to travel has been super strong. Airlines, cruise lines, they're near 52-week highs, breaking out and holding or just setting up. Expedia, Booking, the travel agencies are also kind of setting up. MasterCard, Visa, they're also related to travel in a way. Also looking relatively constructively. But at the same time, we have also areas like retail that have been looking exceedingly weak. And more specifically, like stocks like Target. Look at this with the QQQ being so strong. Look how it's kind of bear flagging. I don't know if it's going to break down, since a lot of the breakdowns have not been really working, but Target is looking...
Right, Walmart's at all-time highs, so the target is something
as a
specific.
disaster. Walmart is doing a little bit better, but definitely like Starbucks also kind of trying to break down. So not everything is going up. That's why I'm saying it's a market of stocks. There is something for everyone. There are areas that are working, areas that are not. Another area that's really working is sports gambling. DraftKings showed relative strength on Friday. Try to break out, and it's really setting up again. And there are other stocks in the sports gambling industry. There my iPhone is getting the stock.
I was going to say that chart was interesting. I mean, rates feel like they're going higher. The best thing working listen, price, if you follow price, it's been working for 6, 7 months. With rates at mortgage rates, I think 30 was like the highest it's been in a long, long time. So let's be honest, we're probably on some sort of borrowed time. If you're a long-term investor, paying all-time high prices for Apple, even though the interest, even though the company's not expensive, when you're buying these giant companies, paying breakout prices, probably not the best idea. But the market's not in bad shape. I just think if you're chasing here with the Nasdaq off 30% from the lows and rates looking to creep higher, I think you're probably going to see better prices at some point in the next 6 months. But at the same time, everybody's so bearish. What is the second half? Like most analysts are predicting like another, a shitty second half because they're covering their asses. So, try not to overthink it here. There's good price action. The energies like the OIH, Ivan. I mean, I don't know if that's good or bad, but they're kind of going sideways for a while, and they're
Yeah,
huge.
starting to break out, and
Like Schlumberger, SLB had like a huge breakout.
yeah, I mean, this is
So they've
yeah,
been biding time for like a year and a half, and they're starting to get. So again, like there's rotation. People want to own stocks. Um, and I think going up that the stocks breakouts aren't working makes sense. I think you have to be more selective here. There's been a great run in the Qs, but selectively, oil looks good. This Fortinet, FT, like in cybersecurity, FTNT, there's good price action and a lot of things, tight price action, but not everything's working. Think about like Twitter left itself open. Look at Meta, pressing $300. I don't think, again, you should chase that. I kind of think you can probably even, I was thinking about I didn't put on a short, but I was thinking about being short Facebook just because everybody knows the story now, right? Like Twitter's imploded itself. I'm on Threads. Have you tried Threads, Ivan?
just sign up last night. Haven't posted
I think you'll
anything.
enjoy it. Because it looks and feels like Twitter, and it's kind of like doesn't have a lot of features, and it's fun. And I'm getting more engagement there than Twitter. So Elon definitely left an opening for Facebook. China with TikTok, Facebook's just stepped in there, And the question is, are you the last sucker in knowing what everybody else knows? But they talked about it in our Trends with Friends show. If you look back at the weekly, I mean, there was no V bottom. It just fucking bottomed. There was no test. I mean, that thing just took off and never looked back. So,
Yeah.
chasing it up here is not. I just think if stocks went sideways in the big caps, it wouldn't be the most concerning thing with rates breaking on. The small caps seem to be like taking up some of the slack here. They've had a little bit of a bounce. I don't know. I
They're
mean,
just
there's
going
not much
sideways. I
to
mean, they
read
need
into
to
this. Yeah, there's
clear in
I wouldn't read much
190
into this.
or
I
180.
any sectors that look interesting to you,
Yeah,
other
I mean,
than
the two that I mentioned, sports gambling, I was going to mention a few other
yeah,
names.
the degenerate stuff
Yeah,
continues to
this one
work.
is a big new breakout from last week. I think they signed a long-term
Oh
contract
my
with
goodness,
NFL.
what is
Um,
this? Provides
I think it's
technical.
a former SPAC. Yeah, that's just breaking out on that news.
Okay.
There are a lot of interesting names in that sphere. IGT obviously setting up near
Yep,
all-time highs. So
sports
the
rated up,
whole area is hot.
tightening. Yeah, there's just
Yeah.
yeah, but and a lot of broken like a lot of the marijuana was getting a bit. There's some rotation into some more speculative stuff. Um,
Yeah, even the Chinese names last week, it seems like, I mean, every time they try to break out, they kind of
yeah,
don't really follow through.
but they're also
Uh,
not going to new lows.
they're not. They're just going sideways. And if this bull market continues, maybe they'll catch a bit. But so far, it's been kind of one
But the
day.
price action and the sentiment is still pretty bullish.
You
The
know,
rate stuff, if you're going to be concerned about anything, again, everybody knows this, but rates, obviously Ukraine, Russia, but again, everybody knows that everybody's speculating that it'll escalate. But with people getting off Twitter, tensions are low, and that is good. Like, for price volatility is fine. It's just that emotional volatility. If you remove yourself from the noise of the news, I think you can keep yourself out of a lot of trouble. But the price action that I read still, Ivan, is good. So I'm not
the bull market is still on. The S&P, the QQQ is still above their rising 20 and 50 days. So what I'm saying is just don't chase blindly. If you're buying breakouts, I would just quickly take some off because many of them tend to fizzle, or just I will be more patient and wait for pullbacks to
if you get a big early win on a breakout, don't with this, you're saying there's a lot of them are turning right back around.
Yeah, I just take some off. Take some. Yeah.
Okay. And then we'll check in next week, buddy.
Yeah. All right, Howard. Have fun.
Have a great week, everybody.